Tax season is stressful for everyone, but for Indian immigrants working in the U.S., standard tax filing rules do not apply. A minor reporting error on a foreign asset can trigger immediate audit notices and fines that start at $10,000. If you hold an H-1B visa, send money back home, maintain an NRE account, or own property in India, your financial footprint crosses borders. The IRS scrutinizes these cross-border assets closely. To navigate this, we are going to build a custom U.S.-India tax prep master checklist. This tool will help you organize your documents and identify the hidden, required forms that standard tax software often misses. By following this checklist step by step, you secure the exact paperwork needed to file a clean, accurate return by April 15th, keeping your wealth and your visa status completely safe. Step 1 on our checklist defines your starting point, and it catches many people off guard. Holding a non-immigrant visa, like an H-1B, does not automatically make you a non-resident for tax purposes. This equation on screen is the substantial presence test. The IRS uses this specific math to determine your tax residency. You add all the days you spent in the U.S. this year, plus 1/3 of the days from last year, plus 1/6 of the days from 2 years ago. If that total hits 183 days or more, you are legally classified as a U.S. tax resident. You will file Form 1040, the exact same form used by U.S. citizens. If your total is strictly under 183 days, which is common if you arrived halfway through the current year, you file Form 1040-NR for non-residents. Getting this calculation wrong forces you onto the wrong tax form. That single arrow invalidates your entire return before you report a single dollar of income. Once you establish resident status, the reporting rules expand. As a U.S. tax resident, you are required by law to report all of your worldwide income. Let's look at this split-screen breakdown to organize our documents. On the left side, we have your standard U.S. income. You need to gather your W-2 from your employer, plus any 1099 forms from U.S. banks or brokerage accounts. On the right side, we list your Indian income. You must track and report interest from NRO savings accounts, rental income from properties in India, and dividends or capital gains from Indian mutual funds. Reporting this income does not result in double taxation. The U.S.-India Tax Treaty protects your assets by allowing you to file Form 1116. This provides a direct credit for any taxes you already paid in India on that same money. Remember, paying taxes in Mumbai or Delhi does not exempt you from declaring the income in America. Leaving foreign assets off your 1040 is classified by the IRS as tax evasion. That brings us to the most heavily penalized item on our checklist, the Foreign Bank Account Report, or FBAR. This form goes to the Treasury Department, not the IRS. This flashing threshold line illustrates the trigger condition. If the total combined balance across all of your Indian bank accounts exceeded $10,000 at any single point during the year, you must file an FBAR. The penalty for missing this threshold is steep. A non-willful failure to file can cost you up to $10,000 per account for every single year you forget to submit the form. There is also a secondary threshold to watch. Under the Foreign Account Tax Compliance Act, or FATCA, if your foreign financial assets exceed $50,000, you must also attach Form 8938 to your tax return. The FBAR does not cost money to file, and it does not create a tax bill. It is purely an informational report. Skipping it is an unforced administrative error that can erase years of your savings. Now let's look at this checklist to see how you can actually lower your tax bill. Your eligible deductions include contributions to a traditional 401k, health savings account deposits, and the standard deduction based on your filing status. However, standard Indian tax-saving investments do not apply here. Putting money into a PPF, ELSS mutual funds, or LIC policies provides absolutely zero deduction on your U.S. tax return. To effectively lower your U.S. tax burden, you have to use U.S.-based financial tools. Your tax strategy must be completely separated by border. This flowchart helps you decide how to actually file. If we follow the left path, meaning you have no income from India and your accounts stay below the FBAR threshold, your situation is simple. You can safely use standard consumer tax software like TurboTax. But if we follow the right path, meaning it is your first year in the U.S., you have Indian rental income, or you hit that FBAR threshold, you need to hire a CPA who specializes in non-resident Indian taxes. A standard domestic accountant will likely miss the specific nuances of the US-India tax treaty, putting you at a much higher risk for an audit down the line. The items you checked off on our master checklist dictate your filing method. Do not force a complex international financial situation into basic tax software. Take a look at our completed checklist. We have determined your residency for Form 1040, identified global income for Form 1116, and checked the threshold for both the FBAR and Form 8938. All of these forms share one absolute deadline. Both your tax return and your foreign bank account report are due on April 15th. You can download a printable version of this exact master checklist using the link in the video description below. While you are there, hit subscribe so you don't miss our weekly financial guides for immigrants in the US. By organizing these specific documents early, you turn a massive legal risk into a highly manageable, predictable system.